Okay, hello, I'm Eric. We are Scalable Capital, and we are an automated investment manager. What does this mean? We manage other people's money with technology, and because we use technology for that, we can do it cheaper, better, and offer a more convenient service. So, quick look at the company. We were founded a bit over a year ago. Since then, we've opened 2 offices in Munich and London. Those are the 2 markets we're active in. The team has grown to 38 people, majority in technology, 22 developers, because we pride ourselves to be a real fin technology company, not just a nice website. People have a very quantitative background. We have raised 11 million euros so far in 2 rounds. And very importantly, we are licensed by both the BaFin and the FCA as a real investment manager, so we are allowed to manage other people's money. What do we actually do? We create and fully automatically manage, rebalance, monitor ETF portfolios for private investors. And this has 2 steps. One step is selection of the ETFs, and the other step is the asset allocation. So, starting at the first one, selection of ETFs. There are 1,500 ETFs in Europe, listed on European exchanges, available to private investors. And they differ in numerous ways: costs, replication methods, tracking errors, bid-offer spreads. We monitor that and we automatically select the best and most cost-efficient, the most tax-efficient ETFs for our investors. And then the next step is the asset allocation. So let's have a look at that. Once the client enters our website, we'll ask certain questions, take details from him, and then he arrives at this investment planner chart. And here, the client, or our clients in general, they can just select 2 things: how much money they want to invest and the risk that they want. Nothing else. Everything else is done for them. Yeah? So you can select the lump sum, monthly payments, and the risk category, and you can go for a low risk category or for a higher risk category, which will increase your expected value, but also the uncertainty around that. And the important thing is how we classify risks. You see here, this says 20% VAR. What does this mean? We quantify risks, yeah? Because in the traditional industry, risks are described with very broad and vague marketing terms. Moderate risk, dynamic risk. People don't know what that means. What's a dynamic risk? Can I lose all of my money, more or less? What we do is we use a quantitative measure that is the maximum yearly loss that won't be exceeded with a certain possibility. The possibility is 95%. And we keep you within that risk category. How do we do that? For every client portfolio, there's a risk management algorithm running in the back. Every client portfolio, every day, we calculate over 1,000 simulations and create a distribution functions of where your portfolio could end up. And then we have a look and see, does this distribution function match the risk you originally wanted in your portfolio, or is it too broad? Are drawdowns too heavy? And then we would reallocate your portfolio. How does this look? This is a simulation of a 20% value at risk portfolio. So historically, a portfolio can move from a portfolio, trying to be too funny here. A portfolio can move from the blue stuff, which is risky assets, equity, emerging markets, equity, Europe, commodities, completely to a 100% bright portfolio, which are less risky classes: money markets, government, but corporate bonds, depending on the risk environment and on the risk simulations that go on in the background. So we constantly and purely algorithmic do these asset reallocations for you. And lastly, where does this all end up? Why should clients use our service? First of all, we give them a better understanding of how much risk you actually have. Because apart from costs, risk is the most important factor in investing. Secondly, we are substantially lower cost than the traditional banking branch. Yeah? We charge 75 basis points all in, including trading, including custody, nothing else. This is our only source of income. Thirdly, because we use low-cost ETFs and the risk management technology, our target is to generate better risk-adjusted returns. And lastly, and this is most importantly for our clients, you don't have to do anything. Everything happens for you. We never ask you to enter any ISIN number, select ETFs. We do everything for you. It's full transparency. You can see it in the app. You can see it on the desktop. But we are a full service. Our clients are busy, smart professionals. Too smart to go to a bank branch. Too busy to do it themselves. So we do it for them. Thank you very much.